we've seen with individuals that discover Bitcoin become more rational, right? A lot of the Bitcoin maxi, mantras, and tropes and are actually rational observations. So I think Bitcoin rationalizes things. It's rational to minimize waste, maximize efficiency, stretch out your time horizon, minimize counterparty risk, maximize optionality, right? These are all things that happen, right? And so I think that the Bitcoin, as it spreads, it will introduce rationality. It will infect individuals, then it infects families, then it infects corporations. Like a corporation that adopted Bitcoin as capital asset, at the end of every quarter, they would say, how much of this cash do we want to dividend out and pay 30 or 40% tax on? How much of this cash do we want to use to buy our equity back? And do we have too much equity outstanding? How much of this cash do we want to use to buy small, mid-sized companies and do mergers and acquisitions? And how much of this cash do we want to convert to Bitcoin? Okay, and that's a rational set of decisions as opposed to the irrational decision. Oh my, we just have to get rid of it because we know we're burning it if we just put it in the bank account. So I think the companies will get more rational as Bitcoin spreads. And I think countries will get more rational because they'll have more optionality. In that Bitcoin 24 model, right? We didn't just create the macro model. I mean, the truth is the macro and the Bitcoin model, they're interesting, but there's not nearly as much emotional attachment to a generalized global asset class. So what's really interesting is the micro models, the fact there's an individual model that says, this is what happens if you adopt the Bitcoin standard and move to a place with no income tax. You're a triple maxi, right? And that's a family decision that you make, right? This is what happens if you actually take a mortgage and buy Bitcoin with it, right? So that the micro model for an individual has a lot of emotional gravitas. And then there's a corporate model, a micro model for corporations. And it shows what happens if your company sweeps its cash flows into Bitcoin, and you can adjust that and you can make assumptions about, okay, I have a company. What if I sold half my equity and bought Bitcoin with it tomorrow? Your company's worth whatever, $100 million. What if you sell $100 million of stock and bought $100 million of Bitcoin and you held the Bitcoin for 21 years? Like now you can look at that. That's very actionable. So I think that the corporate model is interesting. And then I think we created these nation state models, but we created one for an indebted nation state. It's like you're an indebted nation state. What happens if you start to buy Bitcoin? Or okay, you're in debt. Well, what if you issue debt to fund operating losses? Generally not a good idea. What if you issue debt to buy Bitcoin? Actually turns out to be a pretty good idea. Right? I mean, you can say debt's bad, but that's not bad. If I issue $3 billion of debt at 1% interest, and then I buy Bitcoin with it, that's how you outperform the S&P 500. It's only bad when you issue $3 billion of debt and then you spend it on things, spend it on expenses and have nothing to show for it. If you buy $3 billion of consumable goods, then it's bad. So that model, has tabs, and you can run the indebted nation state model, or the rich nation state model, or you can run the United States model, or you can run an institutional model. And I think that that's where you just start to find what you see is, oh my, every time I spend $60,000 unnecessarily, I lose one Bitcoin, and the cost of one Bitcoin is $13 million in 21 years. Now, I agree. I understand you don't like nominal calculations, but I think that nominal calculations they're useful for people because that's how everybody else in the world thinks right now. 99% of the world is still thinking nominally. And I would grant you that $13 million in 21 years is not going to buy you what $13 million would buy today. But having said it all, if you go see someone and you say, "Look, do you really wanna buy that Ferrari? That's 5 Bitcoin." 5 Bitcoin is gonna be worth $65 million in 21 years. You can retire on $60 million might not buy you as much then, but, trust me, it'll still buy you a lot, right? And so what that does is when you stretch out people 21 years and then you crank in, all of these, implications, you start to get a lot more rational. I think that the Bitcoin ethos encourages the dissemination of, rationality in a lot of different ways. I think the big idea, the big opportunity, and this is something that the world really hasn't it doesn't have, or it hasn't had for a long time, is the idea that you could have perfected capital and get a return on it. So, for example, like, what's the end game? Say you end up with a bunch of Bitcoin. If you end up with 1,000 Bitcoin and it's worth 10 million a coin in fiat terms, right? Then you've got $10 billion, right? Worth of something, in fiat terms. Well, so I think we'll get to the point where the major banks will allow you to deposit the Bitcoin and they'll give you 500, 600, 700 basis points of yield against the Bitcoin. Like, I give you a billion, you're the bank, I give you a billion in capital. You loan it to someone that wants to borrow it or short it. They pay you 500 basis points, you give me 400 basis points. That's the role of a banker, right? In a conventional system. That's the way it's supposed to work, right? If it was gold, if I put a billion of gold into your bank and someone else wanted the gold and they paid to borrow it, you're facing both the borrower and the lender. You're putting your balance sheet at work, right? You're going to guarantee their creditworthiness of the lender. I'm not going to loan it directly to them because I don't want the counterparty risk. But if you're a $1 trillion bank with a balance sheet, like a JP Morgan or Citi, I think I wouldn't have a problem giving you $1 billion worth of my capital. And I think that someone else would go to you and want to borrow it. And now the $1 billion is generating 5%, so 50 million a year. So imagine I'm getting 50 million a year in, income off of $1 billion, but I've also got it's in Bitcoin, it's not in dollars. So now when Bitcoin appreciates, my capital is appreciating while I generate yield. And I think Bitcoin offers a different possibility. I see a world, we're not there yet, but I think 10 years out, I see a world where you would be able to take your Bitcoin, put it with a trustworthy, bank, and the bank would lend it out, and they would give you a yield, and you could then never sell your Bitcoin, pay your living expenses with the yield the bank gave you, and then the Bitcoin would appreciate in fiat terms forever. And of course, for that to work, you have to have a trustworthy bank, right? What is a bank in that regard? I mean, classically, that's a bank that they take capital from depositors and they find creditworthy lenders and they charge an interest rate that covers the default rate, right? They actually do proper lending. And I guess this is what's interesting here is that Bitcoin is capital owned by the people. And so the bank basically has to get a return for their own shareholders and a return for the capitalist that own the capital, and they have to cover the credit risk. And the existing fiat banking system is using bank owned by the public and by the governments, right? The government controls the capital that existing fiat banks lend out. You have to answer the question, how is Bitcoin going to perform as an asset? You're going to have to actually have a functioning banking system that will actually loan out the capital. If the, you know, capitalism requires capital, requires banks, requires lenders and borrowers, right? I mean, the basics of Austrian economics is some dude has more money than he needs, and somebody else needs the money in order to build a factory, and that's why you have a banking system and you have lending. So my point is lending's not bad, banks aren't bad, lending Bitcoin isn't bad. Ultimately, if you imagine a world where there's hundreds of trillions of dollars in Bitcoin, we need a functioning banking system to move the capital around, right? And if the capital does move around, then you. Why would you apologize for getting paid a return on your capital? Look, here's the real point, Saifedean, which is you're taking the position that capital has no value. I disagree.
No, I'm not saying capital has no
I
value.
think capital has value, and I think Bitcoin is digital capital. And so to imagine a world in the future where Bitcoin doesn't have value doesn't make any sense to me. If you have capital, then I think you'll be able to loan it to someone or rent it to someone, and they're going to pay you for it in the way that people did make capital available in the past. And the history of humanity is full of examples of banks that made loans of sound money and got paid, and people that paid interest on it. And you're basically taking this position that somehow interest rates go to zero forever because of something, and I don't get the something. If Bitcoin is digital gold in the future, then you should be able to loan it to someone and get paid interest on it in the same way that we loaned gold in the past to people and got paid interest on it. And we can debate over what the number should be, but the debate is, certainly I'm not going to give you the Bitcoin for free. I'm going to expect to get paid for it. And if someone's going to pay for the capital, then there is a business model there. And it's worthwhile to consider the implications of that when Bitcoin is worth $100 trillion.
No, I agree. Let me give you my theory on this, which is kind of, so the Austrians, one of the major contributions of Austrians is to make the case for interest rate. So I'm a bit of a heretic within the Austrians by having this idea, but
apparently,
yeah,
if you're against interest on Bitcoin, you're against interest on sound money. I think that you should only buy Bitcoin if you're going to hold it for 4 years. And so a reasonable thing would be to make sure that any loan you had has to have a minimum 4-year duration. You want to, and you want it to be not a mark. You don't want to borrow money on a mark-to-market basis with against your existing Bitcoin. You never want to do that. But the ideal example would be take a 10 to 30 year real estate loan. I think 2024 is going to be a good seasoning year for Bitcoin. I think we lived through the crazy years, and I think that this is the year one of institutional adoption. Most of 99% of the money in the world hasn't been able to buy Bitcoin, hasn't considered buying it until the spot Bitcoin ETFs hit in January. So here we are, we're like 6 months after that. We're not even 1 year into year one, into the age of institutional adoption. And there's just a lot of stuff that's going to happen from this point. And, there's each one of those milestones is hardening and stabilizing the asset class. So the safe strategy is get yourself positioned where you can hold your Bitcoin for at least 4 years. And then all these, whether these credit markets form or whether they don't form, and whether you can borrow from a safe counterparty or not, all that stuff, I don't know whether you can or can't for the next 4 years. So what you really want is you want to be as much Bitcoin as you can that you can hold for the next 4 years, and then let all these positive developments take place. And then I think, I think there'll be great opportunities and great things to talk about. But for now, enjoy the ride.